Hi, Mark here. Monday, March the 2nd. It is 8:23 a.m. Eastern, 1:23 p.m. GMT. US session now underway, and we find ourselves in a precarious position, or should I say, the market's certainly in a precarious position following the outbreak of war in the Middle East. Third day since US and Israel attacked Iran, which retaliated and brought several other Gulf states into this conflict. We've seen the reaction when the markets opened to start the week, the Asian session, and followed by the European session. And now we're going to see the market's response and reaction now that the US session is underway. Starting on the US dollar index, you can see that as expected, US dollar's safe haven status as the world's reserve currency did play out. US dollar has strengthened after closing last week at 97.58, open to start the week now at 97.86, and I've got resistance at 98.55 with support at 97.72. So certainly strong US dollar as expected in times of, well, geopolitical conflict, which has escalated into the war that's going on in the Middle East right now. US dollar is playing out as their safe haven currency. What I do think is unique and something I'm watching is, yes, as expected, US dollar has rallied. The fact that the US dollar is one of the warring parties, very much so, will that have an effect on the status of the US dollar? We'll watch and see how that does play out. The descending trend line was broken to the upside. Perhaps if sellers step in, the prices will come back below. We'll watch, and as I say, we'll watch and see how that does um, perform, play out during the US session. The S&P 500, we're looking at the futures market for now. We are an hour until Wall Street opens up. I did have in last week my symmetrical triangle. That was broken to the downside. When the market opened this week, the futures market, uh, a sell-off all the way down from the close last week at 68.78 and then reopened in the futures market at 6,818. Hang around that level for now below the bottom of the triangle. We'll see whether that does continue the sell-off in equity markets. Remember the Wall Street opening up will be, even though we've got the futures markets, that's where we'll really see the markets, the US equity market, the stock markets response to the outbreak of the war. Sellers will look down at this support level, 6,768, tough support level to break through. We've seen that. Buyers, on the other hand, will look at today's intraday high at 6,857. Gold, again, as expected, the traditional safe haven status certainly played its role here. And after a strong Friday, closing at 5,279, opened the new week at 5,400, where we're sitting right now. Demand for gold, and I've got resistance at 5,428. Buyers will be looking at the all-time high of 5,595. That's from the end of January. On the upside, a break above this intraday resistance. Alternatively, if there is any kind of a turnaround, a push down from this level, from this area, sellers will be looking back down at the 5,300. But not surprisingly, gold's safe haven status playing out and demand for gold as the US session gets underway. Brent oil, and again, as would be expected, the most directly affected uh, from the war, from the breakout this weekend. And supply concerns now a real, no more rhetoric. This is a reality. The war has started, and Iran, a major supplier of oil, controls the travel route, the Straits of Hormuz. So many facets to the supply of oil being affected and how the market's going to react. You could Friday we saw this very strong from around the $70 all the way up to $73, and then the gap higher to start the new trading week, right up to $78, $80, the intraday resistance. We'll watch and see. I expect on every comment, on every statement coming out of the White House, Iran, all the political players involved will all have an effect on the price of oil, and we will watch and see how that progresses through the US session. The one of the five major assets which has not reacted or responded to the conflict has been Bitcoin, hanging around still in that sideways activity which we have seen since the beginning of February. I've got resistance today at 67,000. I've got support at 65,500. Price action below the descending trend line, which has been in effect the whole of last month of February, and sellers sitting now looking to maybe retest this 65,500. Maybe buyers do step in, break above the descending trend line, the 67,000, look up at the 70,000. Perhaps this is the time that Bitcoin does rally. So far has not uh, proved to be a safe haven status in any way, and investors have not looked at Bitcoin in that way so far. Perhaps that will change, or sellers may well break below the support level, look down at the 60,000, but for now, very little activity in Bitcoin. A lot that we'll be looking at, the political and fundamentals will affect uh, the market, and we'll watch from a technical point of view, knowing that whatever we're looking at, remember the fundamentals are the reason why. The technicals show us when. We're watching the when, and we are aware of the fundamentals, but those fundamentals in the political situation certainly is going to change at a rapid pace through and over the next few days. Good trading, and I'll see you at end of day.